Based on the historical data and forecast, Bitcoin has shown significant volatility. The price has fluctuated between a support of $109,600 and a resistance of $119,300. The RSI has dipped below 50, indicating a potential oversold condition. The Bollinger Bands show that the price is currently approaching the lower band, suggesting a possible rebound. Given this analysis, I propose a strategy focused on capitalizing on short-term price swings. My strategy is a hybrid approach combining RSI and Bollinger Band signals. I will enter a long position when the RSI falls below 45 and the price touches the lower Bollinger Band. The entry price will be $110,400. To manage risk, I will set a stop loss at $109,600, just below the established support level. My target price will be $115,100, aligning with the forecast for the next week. This strategy aims to capture a potential bounce from the oversold condition, while the stop loss protects against further downside risk. The portfolio will be 60% long, 20% cash, and 20% short. Based on the historical data and forecast, Ethereum shows a downtrend. The RSI consistently above 80 indicates overbought conditions, suggesting a potential pullback. The forecast data further supports this, with prices decreasing from $36.70 to $34.30. Therefore, I recommend a short position strategy. We will enter a short position at $3,670. The stop loss will be set at $3,760, just above the historical resistance level, to limit potential losses if the price unexpectedly rises. The initial target price will be $3,540, aligning with the lower end of the forecast range and a reasonable profit margin. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper band, we will close the position and reevaluate. Conversely, if the price touches the lower band, it signals a potential oversold condition, and we will consider covering the short position and potentially initiating a long position. This combined RSI and Bollinger Bands approach provides a dynamic and adaptable strategy to navigate the volatile Ethereum market, maximizing profit potential while minimizing risk. Based on the historical data and forecast, XRP has shown significant volatility with periods of strong upward momentum followed by corrections. The RSI consistently exceeded 80 for a portion of the period, indicating overbought conditions, while also dipping below 20 briefly. The Bollinger Bands have widened, suggesting increased volatility. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals, with a focus on short-term gains. The forecast data indicates a potential downtrend in the coming week, with prices hovering around $3.04 to $3.16. Therefore, I recommend a short position entry at $3.16. Place a stop loss order at $3.20 to protect against unexpected upward spikes. The initial target price is $3, aiming to capitalize on the anticipated downward trend. If the price reaches $3, consider moving the stop loss to break even to secure profits and potentially ride any subsequent bounce. If the price continues to decline, a secondary target price of $2.90 can be considered. This strategy prioritizes quick profits and risk management, aligning with the current market conditions and forecast data. Based on the historical data and forecast, BNB shows a recent downtrend, particularly evident in the last week's forecast, which predicts a decline from $772 to $723. The RSI consistently remained above 70 for a significant portion of the historical period, indicating overbought conditions, but has recently decreased, suggesting a potential cooling off. Considering the current RSI of 52.9 on August 1st and the forecast, I recommend a short position strategy. We will enter a short position at $733, placing a stop-loss order at $758 to limit potential losses if the price unexpectedly reverses. The initial target price will be $723, aligning with the forecast's lowest point. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, which could signal a potential bounce. However, given the overall downtrend and forecast, maintaining a short position is prudent. If the price touches the lower Bollinger Band and shows signs of rejection, we can consider covering the short position and potentially opening a small long position with an entry at $733, a stop loss at $723, and a target price at $757. This combined strategy leverages both the RSI and Bollinger Bands to navigate the market volatility and maximize potential returns. Based on the historical data and forecast, Solana shows a declining trend. The price has been consistently falling from August 2, 2025, with the forecast indicating further downward movement. The RSI is consistently below 80, suggesting the asset is not overbought. Considering the support price of $152 and the falling forecast, I recommend a short position. Entry price should be $162. The stop loss should be set above the upper Bollinger Band at $162 plus $5, totaling $167. The target price will be $158 based on the forecast. To enhance the strategy, we will incorporate RSI signals. If the RSI drops below 40, indicating an oversold condition, we will consider covering the short position at $158. If the RSI rises above 70, we will consider exiting the short position at $167. This combined strategy aims to maximize profits while minimizing potential losses by capitalizing on the downward trend while using RSI to fine-tune the entry and exit points. The portfolio will prioritize the short position with RSI adjustments for optimal returns. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently fluctuates above 60, indicating bullish momentum, with a peak of 76.3, suggesting the asset is nearing overbought territory. The Bollinger Bands have been widening, indicating increased volatility. The forecast for the next week predicts a price range between $0.327 and $0.331, slightly above the current support level of $0.32. I recommend a long position with an entry price of $0.328. The stop loss should be placed just below the support level at $0.318 to protect against a potential downturn. The target price should be set at $0.338, aligning with the recent resistance level, offering a reasonable profit margin. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, initiate a long position at the subsequent closing price. Place a stop-loss order $0.01 below the lower Bollinger Band. For the target price, aim for the upper Bollinger Band plus $0.01. If the RSI exceeds 70, suggesting overbought conditions, consider exiting the long position or tightening the stop-loss. Combining these three strategies, the most efficient portfolio will be a long position with an entry price of $0.328, a stop loss at $0.318, and a target price of $0.338, adjusted based on RSI and Bollinger Band signals for enhanced risk management and potential returns. Based on the historical data and forecast, Dogecoin shows a downtrend with high volatility. The RSI has been consistently above 70 for several days, indicating overbought conditions, and has recently decreased, suggesting a potential pullback. The Bollinger Bands have also widened, confirming the increased volatility. Considering these factors, I recommend a short selling strategy with a conservative approach. We will enter a short position at $0.228, placing a stop-loss order at $0.23 to limit potential losses if the price unexpectedly rises. The initial target price will be $0.21, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 40, indicating oversold conditions, we will cover the short position. Additionally, if the price touches the lower band of the Bollinger Bands, which is currently around $0.182, it signals a potential rebound, prompting us to exit the short position. If the price reaches the target of $0.21, we will evaluate the market conditions. If the downtrend persists, we may consider extending the target price to $0.211. This portfolio combines technical indicators and price action analysis for a balanced and adaptive approach to maximize returns while managing risks. Based on the historical data and forecast, Cardano has been experiencing a downtrend recently, with the RSI consistently below 80 and nearing oversold territory. The forecast for the next week predicts continued downward pressure, with prices falling from $0.772 to $0.718. Considering the support price of $0.624 and the current price around $0.715, a contrarian strategy focusing on short-term bounces near the support level seems prudent. I recommend a strategy that involves entering a long position when the RSI dips below 40, indicating an oversold condition. Specifically, enter a long position at $0.728 when the RSI is 42.9. Place a stop-loss order at $0.695, just above the lower Bollinger Band to protect against a further decline. Set a target price at $0.775, aligning with the recent resistance level and the center of the Bollinger Bands. To refine this strategy, we incorporate the Bollinger Bands. When the price touches the lower band and the RSI is oversold, below 40, it suggests a potential bounce. Therefore, I suggest a slightly more aggressive entry. Enter a long position at $0.718 when the RSI is 42.9 and the price is near the lower Bollinger Band. The stop-loss should be set at $0.696, just above the lower Bollinger Band, and the target price at $0.775, near the recent resistance and the center of the Bollinger Bands. This combined RSI and Bollinger Band strategy aims to capitalize on short-term reversals while mitigating risk with well-defined stop-loss levels. This strategy is expected to yield high returns in the short term. Based on the historical data and forecast, SUI shows a declining trend with increased volatility. The RSI consistently fluctuates, indicating indecision. The Bollinger Bands suggest that the price is currently approaching the lower band, signaling a potential oversold condition. Considering the forecast for the next week predicts a continuous downward trend, I recommend a short position strategy. We will enter a short position at $3.81, placing a stop-loss order at $4.29, just above the upper Bollinger Band. The initial target price will be $3.51, aligning with the forecast price on August 8, 2025. To refine the strategy, we will incorporate RSI signals. If the RSI dips below 20, indicating a strong oversold condition, we will tighten the stop-loss to $4. Conversely, if the RSI rises above 80, suggesting an overbought scenario, we will partially close the position and adjust the target price to $3.56. This dynamic approach allows us to capitalize on short-term price fluctuations while managing risk effectively. The overall portfolio will be 60% short SUI, 20% cash, and 20% allocated to other assets. Based on the historical data and forecast, Stellar shows a downtrend with increased volatility. The RSI consistently falls below 70, indicating weakening upward momentum, and the forecast prices continue to decline. The support price remains stable at $0.26, while the resistance fluctuates around $0.501. Considering these factors, a short selling strategy is recommended. The entry price should be $0.418 plus $, with a stop-loss placed above the resistance at $0.502 plus $, and a target price near the support level of $0.26 plus $. This strategy aims to capitalize on the anticipated downward movement, limiting potential losses with a conservative stop-loss. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential short-selling opportunity. The forecast data suggests the price will continue to move towards the lower Bollinger Band. Therefore, the entry price will be $0.403 plus $, when the price breaks below the lower Bollinger Band, with a stop-loss at $0.443 plus $, and a target price of $0.387 plus $. This combined strategy leverages both RSI and Bollinger Bands to identify optimal entry and exit points, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Jito shows a downtrend. The RSI consistently falls below 50, indicating weakening momentum, and the forecast suggests a continued decline. The support price of 1.58 provides a clear floor, while the resistance of 1.86 has been tested multiple times without sustained breakout. Combining these factors, I recommend a short position strategy. We will enter a short position when the price touches the resistance level of $1.86. Set a stop loss at $1.95, just above the upper Bollinger Band to account for potential short-term volatility. The initial target price is $1.68, aligning with the recent low and a significant retracement level. To refine this strategy, we will incorporate RSI signals. When the RSI falls below 34, indicating oversold conditions, we will partially cover our position, taking profits at $1.75. This allows us to capture some gains while remaining exposed to potential further declines. If the price continues to fall and reaches the support level of $1.58, we will adjust our target price to $1.52 based on the forecast. The combined strategy provides a layered approach, balancing risk and reward with defined entry, stop loss, and target prices. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently fluctuates above 60, indicating bullish momentum, with a peak of 76.3, suggesting the asset is nearing overbought territory. The Bollinger Bands have been widening, indicating increased volatility. The forecast for the next week predicts a price range between $0.327 and $0.331, slightly above the current support level of $0.32. I recommend a long position with an entry price of $0.328. The stop loss should be placed just below the support level at $0.318 to protect against a potential downturn. The target price should be set at $0.338, aligning with the recent resistance level, offering a reasonable profit margin. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, initiate a long position at the subsequent closing price. Place a stop-loss order $0.01 below the lower Bollinger Band. For the target price, aim for the upper Bollinger Band plus $0.01. If the RSI exceeds 70, suggesting overbought conditions, consider exiting the long position or tightening the stop-loss. Combining these three strategies, the most efficient portfolio will be a long position with an entry price of $0.328, a stop-loss at $0.318, and a target price of $0.338, adjusted based on RSI and Bollinger Band signals for enhanced risk management and potential returns. Based on the historical data and forecast, SUN token exhibits a strong uptrend. The price has consistently been making higher highs and higher lows. The RSI has been fluctuating between 53.6 and 83.1, indicating periods of both buying and selling pressure, but overall trending upwards. The Bollinger Bands have been expanding, suggesting increased volatility and a continuation of the trend. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0215, coinciding with the start of the forecast period and a reasonable entry point within the established uptrend. A stop-loss order will be placed at $0.0202, just below the support level, to limit potential losses if the price reverses. The initial target price will be $0.0226, aligning with the forecast high and a potential resistance level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will consider adding to the position at $0.0202. Conversely, if the RSI reaches 70 or above, suggesting an overbought condition, we will consider taking partial profits at $0.0223. Furthermore, if the price touches the lower Bollinger Band, it's a strong indication of a potential rebound, reinforcing the long position. If the price breaks above the upper Bollinger Band, it signals further upward momentum, prompting us to raise the target price to $0.023. This dynamic approach, combining trend analysis with technical indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Litecoin shows a recent downtrend, with the forecast prices consistently below the recent closing prices. The RSI indicates that the asset is currently in the overbought territory, with values above 80, suggesting a potential pullback. However, the price has been fluctuating within the range of $106 to $119. Considering this, I propose a short-term contrarian strategy. We will initiate a short position at $113, anticipating a correction. The stop loss will be set at $114 to protect against a potential false breakout, and the initial target price will be $109, aiming to capture a moderate profit. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the upper band, reinforcing the overbought signal. If the price breaks below the lower band of $108, we will adjust the target price to $108. Conversely, if the price reaches the upper band of $123, we will exit the position and reevaluate. This portfolio combines RSI and Bollinger Bands to manage risk and optimize returns, providing a dynamic and adaptive approach to trading Litecoin. Based on the historical data and forecast, Kava has been in a downtrend, consistently testing the support price of $0.38. The RSI indicates oversold conditions, fluctuating between 32.9 and 44.5. The Bollinger Bands show that the price has been nearing the lower band, suggesting potential for a bounce. The forecast for the next week predicts a continued downward trend, with prices falling to $0.369. Considering these factors, I recommend a contrarian long position anticipating a short-term rebound. My strategy involves entering a long position at $0.383, coinciding with the initial forecast price and the established support level. The stop loss should be set at $0.377, just below the forecast low and the lower Bollinger Band, to limit potential losses. The target price will be $0.404, aligning with the recent resistance level and a reasonable profit target given the anticipated rebound. This strategy combines the support and resistance levels with the RSI and Bollinger Bands to maximize the potential for high returns while managing risk effectively. Based on the historical data and forecast, Dogecoin exhibits an overall upward trend, supported by consistently breaching the $3.3 mark and the forecast predicting prices above $3.5. The RSI consistently fluctuates, but generally remains above 50, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. The support price has remained stable at $3.28, while the resistance price is $3.71. Considering these factors, I recommend a long position strategy. Entry price will be $3.52, with a stop loss set at $3.42, just below the lower Bollinger Band to mitigate risk. The initial target price is $3.68, aligning with the forecast high for August 6, 2025. To optimize returns, I propose a dynamic strategy. After reaching the initial target price of $3.68, we will move the stop loss to break even at $3.52, securing the initial investment. Subsequently, the next target price will be $3.73, based on the forecast for August 7, 2025. If this target is achieved, we will again adjust the stop loss to $3.68. This strategy combines trend following with risk management, capitalizing on the anticipated upward movement while protecting profits and limiting losses. The RSI readings suggest a potential pullback, which would be a good opportunity to re-enter the market. Based on the historical data and forecast, Ethena shows a volatile trend with periods of both upward and downward movement. The RSI consistently enters overbought territory, peaking above 80 for several days, indicating a potential pullback is likely. The Bollinger Bands also reflect this volatility, with the price frequently touching the upper band and then retreating. Considering the support price of $0.343 and resistance price of $0.666, the current trend appears to be slightly bullish, but the overbought RSI suggests caution. Therefore, I propose a strategy that combines trend following with RSI and Bollinger Band signals. My investment strategy is to enter a long position when the price touches the lower Bollinger Band and the RSI falls below 20, indicating an oversold condition. Given the forecast for August 2, 2025, the price is $0.626, and the lower Bollinger Band is $0.196. We will enter a long position at $0.196 plus $0.01, setting a stop loss at $0.186 to protect against a sudden downturn. The initial target price will be $0.432 plus $0.02 based on the recent high. If the price reaches the target, we will move the stop loss to break even to secure profits. Additionally, if the RSI falls below 20, we will enter a long position at $0.196 plus $0.01, setting a stop loss at $0.186 and a target price of $0.432 plus $0.02. This approach balances the potential for high returns with risk management. Based on the historical data and forecast, Pudgy Penguin shows a mixed trend with periods of consolidation and upward movement. The RSI consistently fluctuates above 50, indicating a generally bullish momentum, although it has dipped below 60 recently. The Bollinger Bands suggest periods of volatility and potential price reversals. The forecast data for the next week indicates a slight downward trend, hovering around $0.038. Considering these factors, I recommend a moderately bullish strategy with a focus on capitalizing on short-term upward movements while managing risk. My strategy involves a long position with an entry price of $0.0361. The stop loss will be set at $0.0324, coinciding with the support price, to limit potential losses. The initial target price is $0.0431, the previous resistance level. We will use an RSI-based trailing stop loss. If the RSI drops below 40, we will exit the position. The Bollinger Bands will provide additional confirmation. If the price touches the lower band, it signals a potential downward reversal, reinforcing the stop loss trigger. If the price reaches the upper band, it suggests an overbought condition, and we might consider taking partial profits or tightening the stop loss. This approach balances potential gains with risk mitigation, suitable for the current market conditions. Based on the historical data and forecast, PAX Gold shows a slight upward trend. The support price consistently holds at $3,350, while the resistance fluctuates around $3,420. The RSI has been oscillating, recently showing signs of entering oversold territory with a dip to 38.3. The Bollinger Bands indicate periods of volatility, with the price frequently touching the upper band. Given this, I recommend a long position strategy. Entry price should be $3,350, coinciding with the support level and a potential oversold RSI reading. A stop loss should be placed slightly below the support at $3,320 to mitigate potential losses. The initial target price should be $3,410, aligning with the upper Bollinger Band and a conservative approach to the resistance level. To refine the strategy, we'll incorporate a dynamic target based on the RSI. If the price reaches $3,410 and the RSI rises above 60, consider shifting the target to $3,450. Conversely, if the price approaches $3,320 and the RSI falls below 30, exit the position to avoid further losses. This adaptive approach, combined with the initial entry, stop loss, and target, aims to maximize returns while managing risk effectively. The portfolio will prioritize this long position with a 70% allocation, complemented by a 30% allocation in a stablecoin to capitalize on potential pullbacks. Based on the historical data and forecast, Maple Finance shows a downtrend with periods of volatility. The RSI consistently fluctuates, but it has been below 80, indicating that the asset is not overbought. The Bollinger Bands have been widening, suggesting increased volatility, and the price has frequently touched the lower band, indicating potential oversold conditions. The forecast for the next week predicts a continued downtrend, with prices gradually decreasing. Therefore, a short-selling strategy with a focus on capitalizing on potential bounces from the support level is recommended. We will implement a three-pronged approach, integrating RSI, Bollinger Bands, and support/resistance levels. Firstly, we will initiate a short position when the price touches the lower Bollinger Band and the RSI is below 40. For example, if the price reaches $0.404 on August 7, 2025, and the RSI is around 39.8, we will short at $0.404. The stop loss will be set slightly above the support level at $0.42 to protect against false bounces. The target price will be $0.36, based on the continued downtrend and the lower Bollinger Band. If the price reaches $0.422 on August 8, 2025, we will close the position. This strategy combines technical indicators with price action to maximize potential returns while minimizing risk.